Hi there, and welcome to LAT's weekly market insight. As the optimism surrounding the COVID-19 vaccines increase, we see investors moving away from safe havens such as gold. It's currently testing a big daily support level at 1764. A close below could see losses down to the 100% fib expansion and the level of support from June last year at 1720. Over to oil into the 4-hour chart. We can see it has continued its bullish run since this consolidation period in mid to late January of this year. As global industry opens up with increased optimism, so increases demand for oil. That, alongside the initial issues in Texas and now a potential elevation of US-Iran tensions, could see oil hit $70 a barrel before the end of Q1. Of course, Iran a huge supplier of oil, and so any sanctions placed upon them would result in a huge reduction of oil supply, in turn increasing its value. That being said, we have seen the formation of a rising wedge pattern, which we know to be a bearish price pattern. That, accompanied with considerable bearish divergence on the 14-period RSI, does suggest that a pullback, if not a sideways consolidation, is likely before this market is to continue its bull rally. So do be aware of that, or potential opportunities to get in even lower. In the Forex market, if I jump to cable on the, I'll keep it on the 4 actually. Here, we've seen a relatively large sell-off in cable. Since reaching highs of 142.43 a few days back, there has been consistent losses made. The move is facilitated by a stronger dollar and the advancement in US bond yields. The most notable reaction to this bond news was seen here in the tech-heavy NASDAQ. If I pop it in the 1-hour chart, we can see that it did fall roughly 3.5%. A fundamentally driven move, yes, but a clear technical setup was available to short the US tech index. Here we can see a clear downtrend. The market did retrace and formed a rising wedge pattern, which, as we know from earlier at least, a rising wedge pattern known to be bearish. Therefore, looking to go short on the breakout, and the break of this support level was the potential move. Usually one would place their stop losses above the highs here. Also, that level is even more relevant due to the fact that it is the 61.8 retracement of this initial move. So a good place for a stop loss. However, before the trigger level was broken, this support level and the rising wedge level, the market did come and test a little level here. And as you can see, a quick check shows that this is a relevant level. Here we have a bit of support, resistance, support, and then most recently resistance before triggering the trade. Therefore, your stop loss could be placed above that level, increasing your risk to reward ratio. As you can see, 1.8. Target level, base of the rising wedge, and of course this support level down here. So definitely a fundamentally driven move. However, the technicals did aid us with our entry stops and target placements. Next week, or on Sunday even, we have Chinese purchasing data with European and US PMI data to follow. Tuesday sees the Aussie interest rate decision, but like New Zealand this week, no change is expected. Other than that, a raft of minor data throughout the week, with the all-important US employment data wrapping up the week on Friday afternoon. That's all from us here. Do stay safe and do have a lovely weekend.